YouTube, good afternoon. This is TerrenceRe. Got a little stock market update with you this afternoon, and I'm going to be talking about butterfly option spreads. I have one set up that I put on today, and I'm going to go over the dynamics of it and the pros and cons of it right after the buffer. All right. So you guys let me know. I got my picture in picture. I wanted to give you more space on the screen so you can see the full chart. I'm gonna go over the analyze tab. I'm gonna show you how it looks, and I'm gonna show you how the spread progresses over time. And I'm not gonna hold you long. We're gonna show you how to set these up. So I put the butterfly option spread on in the QQQ ETF of the NASDAQ. So first of all, let's look at the chart, and then we'll start there. All I have, if you follow my channel, you know I like to use Fibonacci for retracement zones, projections and things of that nature, support and resistance. And you see I drew it from this low right here to this high. And so you can see that the first line of the first zone was we got this high, then it came down, we got this low, we got like a little hammer candle, pulled back, and then we come down to the 38.2% retracement level on this Fibonacci retracement. And on the Tastyworks platform, all you have to do is go up here to the top where it says no tool, and that's just because I got it on this little arrow. And then you come down and you find Fibonacci retracement, you left click on it, and then you would come over here and click from the bottom to the high, and then it shows you that, right? So I want to try to pin this butterfly spread. And if you're looking at this, you're saying, what is a butterfly spread? Now that I've shown you the setup, and I think that it's going to come down into here and touch right around this level, right? This is the 61.8. This is what I think. And I also, if I pull this out, I'm just giving you my technical basis for it. And then what I'll do is try to form a trade around what I think. If you look at this is the MACD, moving average convergence divergence. I got a crossover of the MACD up here, which is just the fast length EMA over the slow. It crossed right here, which is actually yesterday. So with me getting that cross, that's a bearish signal for me. Some people will wait till they cross the zero line. I want to get in right here. And so that's another bearish signal. If I look at my RSI, the RSI has crossed over below the 50. So that's another bearish signal. So all of those things, and also with it being below my Wilder's smoothing moving average, is telling me that, hey, we may get a continued down move in the NASDAQ. Coupled that, if you put that all with the NASDAQ has been leading, which is the NASDAQ the NASDAQ is comprised of mostly tech stocks. So if you look at everything else on the day, well, the Russell just went red, but the Dow is still green, and the S&P 500 is green, but the NASDAQ is leading the way lower. And if we come down and look at these NASDAQ stocks, the only one that is green is Facebook. Apple is down, Amazon is down, Google. I think Microsoft is in the NASDAQ. I'm not 100% sure, but I know Tesla is down. Netflix is down. NVIDIA is down. And the AMD is down. So I have my bearish consensus. Now, let's go to the option chain and let's put this sucker on, or which I already got it on, but we'll go over. I just put it on today too. So if we come here, I came to 42 days. So you gotta, you kind of want to pick a range of how long, it might take to get there. It could get there. the way this market is moving, it could get there tomorrow. It could get there later on today, get some bad news. So, or any news, right? So, but what I wanted to be in was the monthly. We got a monthly at 6 days, and then we got a monthly at 42 and a monthly at 70. These tend to be the most liquid of your option contracts when you're looking at the option chain. So I came down to 42 days. Now, since I'm bearish, I'm going to deal with the put side, right? I'm going to be buying my butterfly option. I'm not selling them, right? So there are some people who do sell options. They'll ratio them and this, that, and the third. For this particular trade, I'm buying. I want to buy this option. So what that means is when you buy options, you have to be right directionally. Unless you're buying unless you're buying an iron condor or you're buying a straddle or something like that. But most of the time people don't do that. They will sell those, but you can. But you still need big moves even when buying that iron condor. You're gonna have to get an explosive move at some point. So what I did, and it's moved since I put it on. I came, bought the put here. Well, actually, I bought this put. Now, this was just this. The market has moved a little bit, but I generally want to be one right there, but above the line, or you would say in the money. So this would be in the money. Thus you see the ITM right there. Let me delete this leg. Right here, you see ITM. That means in the money. So I want to be one in the money, and then what I'm also going to do is you're going to sell two puts wherever you're going to try to pin it, right? This is where I'm going to show you a visual of this so then you'll understand it. All this is basically two spreads. I'm buying a put spread here. That's one put spread. And then you would come over here and then do another one. And then that would give you another spread. So I'm clear that out. I'm going to do it again because you're going to sell two of these. You're going to buy one of these and then buy one of these. That's two spreads. So that if I were to buy one here and then sell one here, if you look down here, that's one spread, right? So now I would have to click on this again, and then I'm going to up the quantity. So that makes it two, right? Click out of that and then come down here and then buy another put. Now, if you look down there, you see 1, 2, 1. This is so I got 12 down. If you come right here from 352 to 340, that's 12 spaces down or $12 wide. And then if you go from 340 to 328, that's another 12 down. So it's equal, it's an equal distance on both sides, right? Now, I'm not breaking the wings or anything like that. If I wanted to break the wings, or if it's not equal distance, like if it's not equal from here to here as it is from here to here, like let's say you, instead of buying this put, you bought the put here, or you shorten it up, you're breaking the wing. And that's what you call a broken wing butterfly. I'll do that in another video. But for the purpose of this video, it's equal distance. And you're gonna say, well, why did you do that? And now I'm gonna get into the why, right? Because I think it's gonna get here, which is 340. Let's go back to the chart. So the 61.8 is right at 338. Right here is 340. I wanted a nice round number, 340, right there. I'm going to try to pin this option there sometime within the next 42 days. If the market goes up, I'll lose the money, right? I'll lose what I paid for this option. And I paid 128 for it, right? So if I were to put it on right now, let's put it on right now. And then I'm going to let you see. Got a 1, 2, 1. It has a negative sign right there because I sold this one. I bought these and then sold this one, sold the middle. Right here, now it's going for 131 because it's about $3 in the, I made about $4 or $5 on it right now. If you come down here and look at the bottom of the screen, you'll see where it says Delta. This is a bearish trade. So you can see it says negative 3.4. That means that anytime you got negative deltas, you're bearish. And the thing about this, though, because of the selling of these two puts right here, this trade is going to create positive theta. So I'm not losing money. Like I didn't buy a depreciating asset. Most of the time when you just buy a call or just buy a put, you're going to be paying, you're going to be losing decay of that option. But because of the selling of these two, it's creating positive theta decay. Now, let's look at this on the Analyze tab and see how we make money. Over here, once again, on Tastyworks, you come over here and click this arrow. I already got it on Analysis, right? So let's click on, actually, I can click Analysis right here. Move this back. So now what you're looking at now, and I'm going to explain this, try to make it as easy as I can to understand. Now, what you're looking at right here, this green area, this is where you make money, right? So look up in the little box if you guys can see that. I don't know if you can see it, but in the box, as I move, this is showing a theoretical line today, right? If it continues to go down, this is just today. If it got all the way to if it got to 328, let's say it got to 328, I'd make $55 today. If it just got to 340, I'd make $38 today. That's just today. This line is just showing today as of April 8th. Now, I'm going to show you something else. See, I just need to be right directionally, and then I'm gonna make money on this trade. Long as the market goes down, I make money. So if you're the type of trader that you can pick direction and you're good at it, then this might be the kind of trade for you. Another thing, right over here, I can move this trade out in time, and the Analyze tab is going to analyze and tell me theoretically how much money I would make. So let's say Monday, I moved it out to 411, which will be Monday. On April 11th, if it goes down to 340, I would make $45. You guys see that? Now the max, because this is a $12 wide spread and I only paid $1.28 for it, I can make $1,072 max profit on this. I'm not going to try to, that's not the goal though, because I would literally probably have to hold this for 42 days. Now let's just go out, let's say next Friday, we're going to go all the way out to April 15th, and it goes down to 340 by April 15th, $57 just in a week. Do you guys see? And if you also are paying attention, because this is 40, let's take 21 days out of the 42. Do you see how the range of the green part is moving? Now, if I continue to go, you're going to see this go all the way to it. This is 0 days, the last day. Now you can see it looks just like it does on the trade tab. Look at it. Almost like a little triangle, right? Now let's go back to the Analyze tab and look at it. Go back to the curve view. And you see? Let me go back. So if I go back to, see if I move it back out, I move the days back out to 21, it starts to round off. It doesn't get to that pyramid level where you can make max profit to near the end of the trade. So I would have to hold it if I tried. That's why I said I'm not going to try to make the full thing. I'm not going to hold this for 42 days. As soon as it goes down to my target, I'll go ahead and take profit. But if I do hold it for 42 days and try to close it out at expiration, you can see what can be made on it. And you can see it, you can't make max profit until that last day. That's why you don't try to hold it to the end, right? So directionally, I just need to be right directionally. This is a little bit less and when I was looking at this, when I was getting ready to put this trade on, I was looking at the market and I want to be bearish the NASDAQ. So I thought about selling a call spread, right? Selling a call spread, probably taking in premium about the same amount of maybe $1.30, $1.40 or something like that. Maybe even $1.50. You try to take 50% out of it, you're looking at about 60, $70, right? It's the same amount of money. Why sell that option spread when I think I'm pretty certain? I don't know for sure. I think it's going to keep going down. I'd rather just do that, right? And then make that little money and not have to be margined or have as much buying power effect, in this small account that I have. So with that being said, hopefully you guys, and let me know if you like the picture like this. I wanted to show more of the screen so you guys could see more of the chart. I gave you a little bit of technical analysis about like how I found the trade, my thought process on how to get into the trade, and then I showed you how to put it on. Now, if it's something like I just put this on today, right? So if it's something you want to do, do your own research or whatnot. If you want to roll the dice, if you think the NASDAQ is going down, and you could do this with anything, if you're someone, let's just say you're bullish Tesla. I know a lot of people that are bullish Tesla, and you're like, man, I think Tesla is going to come out and take out these highs, or maybe even this high. What is this? 1154, right? So one of the things you could do, let's say we come over here 42 days. Now 1154, so you could do 1155, right? And one thing I have over there in this column is touch percentage. So 1155, you have a 53% chance probability of touch of the market touching here. So you could come here. This is going to be an expensive call spread. Come up here, butterfly call. Change this to call. All I did was click on it. And up here, it'll do it for you. You come up here, you find butterfly, put it on call, click go. Now, it put it on here on the screen, but I don't want that one, right? I don't want it right there at the money. So what you could do is you just move it down. Come over here and click on the strikes, or you can come in here and click, move it around. I like to put one here. That's one in the money. This would be wide. This would be huge. And it probably would be really, really expensive, but it's cheaper than buying Tesla stock. So let's see, 1155, 1055. We got to do some math. That'll be 130. So you got to go 130 to the upside, which would be what? 1285. If my math is right. Is my math right? You don't have that. So we don't have an 85 strikes. We probably had to do 1280. Let's do this. 1150, 1280. That's what? 130. So you could do that. This would be an expensive butterfly. It's going to cost you $2,700, right? I'm going to lock it in right here. But so it will cost you $2,715 to put this on, as I have it set right here today. Now, max profit would be $10,285. So you're risking what, one to make possibly four, somewhere right around in there. So that's what you're looking at. Now it's cheaper. Now looking at that $2,700, that's what, 2 shares of Tesla, maybe 3, 2.5. You can't buy, so what, 2 or 3 shares of Tesla. And if you held it till it got to 1150, you might make what? $300 if you bought 3 shares, putting up about 3 grand. You could do this spread and probably make more and not have to put up as much. So that's the thing. That's one of the pros of it. The con is you got to be right directionally. If you're wrong and it continues to go down, you lose your money. So with that, guys, I don't want to make this video too long. I'm already over what I wanted to be. Hit that like button, hit the subscribe button, share the video. If there's another type of option spread or something you want to see me do, I'll do it. I'll find the underline, put a trade on, and then we'll see how it goes. Right now, just about $3 on it so far on the day. And that's it, guys. I'm out. Peace.